Good morning, and welcome to the Herb Day Radio Saturday Morning Business Showcase. This time is set aside to help listeners learn about topics of business, services, medical, and legal matters. First today is Kim Boyer of Boyer Territory, a real estate company.
Hi, this is Kim Boyer. Welcome to Real Talk. Today we are talking about getting a mortgage loan and specifically about pre-qualifications and pre-approvals. And we have Rodney Donnelly from NCB with us today to talk about that and more. Rodney, would you like to start us off with the explanation of that?
Sure, Kim. I appreciate it, and I appreciate you having me in to talk today. It's always fun to talk about mortgages, especially in today's environment and today's market where there's a lot going on. So
for sure.
It's going to be good to be able to maybe provide some guidance to those who are listening. So we'll start with the pre-qualification and how it differs a little bit from the pre-approval.
Go ahead.
So when somebody comes in to see me, typically what we're doing are pre-qualifications. We'll talk to them a little bit about what it is their intentions are, and they will make application. Easy to do online with us. And
online is good.
That's always good. Yep, convenient for everyone. And what they're going to do is fill out that application with the information that they're just providing. So the ones that are the part of it that's most important to us is the income.
Yes.
So whenever they're filling out that application, they're just going to put in what they're making as far as their income for a month.
Got it.
All right. They'll finish out that application. We'll process that, and it goes through an automated underwriting program. So based on the information they provided, we'll look at all that, their income, their work history, their where they've been living, and the history of what's happened there, if they own a home or if they've been renting. And we'll make a check of their credit report. We'll put all that together, and there will be an automated decision based off of what they provided. And that'll tell us whether or not they're pre-qualified for a mortgage loan.
And that gets them started, and then you send a letter to their realtor, and we can start showing them houses.
That's exactly right. Yeah, that's what we like, isn't it?
That's right.
It's better than the other letter that sometimes
right.
we have to issue, which is the denial letter.
Denial, or you have to wait a few months.
That's right. Mm-hmm. That is correct. So, we'll provide that letter to the person who applied, and then we'll also send it to the realtor, and we'll start all those conversations of trying to help not only the realtor but the borrower in finding the right home for themselves.
Sounds good.
So how does that differ from a pre-approval? Well, a pre-approval just digs a little deeper. As I mentioned with the pre-qualification, their income is just what they provide us.
Correct.
Pre-approval, we're going to ask for the actual documentation.
The hard documents.
Yes, we want to see the pay stubs. We're going to want to see W-2s. If they're self-employed or have some rental income or some kind of income outside of just the wages from an employer, then we're going to ask for tax returns and obtain 2 years of tax returns.
And so it's 2 years for everyone or just self-employed folks?
It'll be 2 years for everyone.
Gotcha.
All right. So if you're employed and you have an employer, we're collecting the W-2s, not the tax returns, just their
Gotcha.
W-2s for
Okay.
2 years.
Okay.
However, if there is other income, we're going to go and move on to the tax return itself so
Gotcha.
that we can verify what's being reported to the IRS. So from there, now it's no longer automated. We're going to actually send it to an underwriter. The underwriter is going to review everything, and they're going to make a hard determination of yes or no as to whether or not they are pre-approved for a mortgage loan.
Gotcha. And can you talk to the folks about what an underwriter is? I get this question a lot.
Mm-hmm.
And I'm just like, they're the person who reviews. They're making sure you're checking the boxes. And what's your take on that?
Okay. Yeah, so whenever you are applying for a loan, whether it's a mortgage loan or any loan for that matter, there is going to be a credit policy that dictates what it is that's going to be approved. So, for example, credit score. There's a determination on what is allowed for a credit score. So from a conventional financing perspective with most banks, for a mortgage loan, that credit score minimum is going to be a 620.
620 for conventional.
For conventional, yes. If it's not a conventional loan, and let's say it's just going to be what's called a portfolio loan, which is a loan that's just held on the books with the bank is going to be more stringent because it's actually on their books and it's got to perform well. So
Understood.
that's going to bump up that credit score requirement maybe to a 650, possibly even a 700 or higher. So an underwriter is going to look at those credit policies and make sure that the application and that supporting documentation is all accurate and all fits within those guidelines of the credit policy.
Gotcha.
So it's more than, I would say, just checking the box to make sure we collected items. They're actually reviewing all that, making calculations,
That it's strong.
confirming
It's a strong
everything,
client.
yep, and making sure it meets that credit policy requirement.
Understood.
So from a standpoint of which is better, a pre-qualification or a pre-approval, well, certainly a pre-approval is a little bit more of a firm commitment to that loan from a bank's
Correct.
perspective. However, the automated process of a pre-qualification, majority of the time is sufficient because it's the same, whether it's automated or somebody's looking at it, it is bouncing it against those credit policies.
The same policies.
The same policies. There's no difference in them. The only real difference between the two is we've got hard documentation from the borrower
To support
that
that.
supports it.
Gotcha.
Okay. And especially in today's market environment where it's extremely busy, we certainly would rather do a pre-qualification versus a pre-approval. So if someone comes in and they're a 725 credit score, they've got plenty of monthly income, everything is good, their credit is good, no issues like foreclosures or bankruptcies, then a pre-qualification is going to be just as solid. I mean, there's no indication that there's any problem with it.
Correct. That sounds good. So then, other than a conventional type loan and the portfolio, what other type of loans do you handle at NCB?
At NCB, those are the only two that we're handling currently. And loan programs kind of within a bank structure oftentimes will adjust over time, right? So if we think back to, let's say around 2002 time period, 2008, 2009, when there were issues within the market, well, credit policy changes a little bit. The type of loan programs that we're offering change a little bit because we're always paying attention to risk, and we do not want to get too deep into the risk side.
Understood. Well, we'll be right back with more from Real Talk after this. If you're looking for a piece of land, we have about a half-acre lot in Leesburg. It's on State Route 28. If you're going from Hillsborough to Leesburg on 62 and you turn left on 28, it's out there just a little ways on the left-hand side before you get out of town. It's, like I said, about a half-acre lot. You could build your new home there. It is in the Leesburg School District, of course, and it's in between two other existing homes there. There are some slight restrictions, subdivision restrictions. Water and sewer is available. There is tap already on the property. So if you can't find what you're looking for because inventory is low, give us a call. That little half acre is listed for $15,900 at this time. Give us a call if you want to take a look, if you want to make an offer. If you got more questions, give us a call, 937-393-9270. We're back in the studio with Rodney Donnelly, and we're going to continue our conversation about the types of loans that NCB offers and some of the programs that they have. Go ahead, Rodney.
So kind of finished off there talking about other options that exist in the marketplace. We do the conventional financing, which is through Fannie Mae. Freddie Mac is also a conventional investor for loans. And then you also have FHA, USDA, and VA. So those are the most common ones that are out there in the marketplace. And they each have their own unique differences and little specialties that they are involved in, right? So certainly it's always good to investigate and determine what program's best for you as a customer or as a borrower.
That's true.
As far as NCB, we also, on the real estate side, on the residential side, there's different grant programs that come available. So
those are good programs. A lot of people have taken advantage of those.
That is correct. Yeah, it's always good to have maybe some free money out there for you if you
That's
qualify.
Right. And you might walk away from the closing table with a little bit in your pocket instead of having to bring to the table.
That is correct.
Yeah, I've had that happen at your bank, at your closing.
Yeah,
so.
yeah, and that's always the borrower is always happy when that happens.
That's
they get
right.
some money back. So NCB ourselves, we have a grant that offers $5,000 that can be used for down payment or closing costs. And that's for low to moderate income households. So what we're trying to do is those who might have some difficulty with some of the income that they have, they want to be a homeowner and they're renting currently, but they'd really like to be able to find their own home. It's a great opportunity for them to have.
Helps them make that transition.
That is correct. And then each year, the Federal Home Loan Bank, usually in the spring, comes out around March, April time period. They have a Welcome Home grant, and it's very similar to ours. In fact, ours is just mirrored off of what that is. The Federal Home Loan Bank has a certain amount of money that they provide for it. Once it runs out, it's done.
Then it's gone. First come, first served. But if you are looking for a home during that time and you get under contract, it's locked in. Is that correct?
That is correct. Yep.
Yeah.
Yep. So the funds usually last a couple months and then they run out. But if we're already under contract and got the process started, then you're good.
Then you're
so
good.
it can
That's
close 6 months later and we're still okay. You still have those funds.
That's good.
And then NCB made a decision, let's not just do this for 2 months, let's do this year round. So
Very
that's
good.
where our program came from.
That's a very good program. A lot of people, it comes in really handy. The whole process is really stressful for people, and if they have that extra that they don't have to worry about, it's just something else that they don't have to worry about.
Oh, yeah, that is correct. And as you mentioned, you pair that with some seller-paid closing costs, and now all of a sudden you may end up getting some money back at closing.
Right. And also around that time of the year is they may be getting income tax
Correct.
money back, and you can use that because it's a large sum sometimes, and you can prove where it comes from. And
Right.
Another thing that I've learned about in my real estate career is seasoned money. And a lot of times people don't know, well, you need $5,000. Well, I got it at home in a paper bag, but that's not
Right.
even good. It has
That
to be
is
in your
correct.
account for 2 months, or it can't be used in the transaction.
That is correct. Yeah, the federal government always wants to know where that money's coming from because they try to stay away from money laundering. And it's too easy to launder money if it's not made its way into the banking system. So we like to see
Gotcha.
that money already in a banking account, an investment account, something
Yeah.
along those lines where it's been there for a couple months.
Documentation where you can prove it. I had a client one time who said they were putting down a large sum, and I said, well, we have to have proof of that. And they said, do we take a picture of it? I said, no, that's not going to work.
No, that would not work. I've never heard that one, so that's a new one for me too.
I said, I don't think so. I think we're going to need to do something else. So
Right.
it all worked out. But
Well, that's good.
usually, if you stick with it, there's a way to make it work, whether you have to wait the time period or if you have money in another account that, can take part of that.
Right.
So, but I appreciate you being on with us today. And if folks want to reach you, what's the easiest way to reach you?
Well, I am working a bit remote now since COVID's in our environment. So, but you can reach me by phone. It'll ring wherever I'm at. It's coming to me. So
Gotcha.
my phone number is 937-840-2233.
All right. Thanks for being with us today.
I appreciate it, Kim. Thank you.
Hi, this is Kim Boyer from Boyer Territory, a real estate company. Are you or your family members tired of paying rent and having nothing to show for it? Do you think you can't buy? Call me now at 937-393-9270. Boyer Territory, a real estate company. We're open 24 hours a day at BoyerTerritory.com. So until next week at 8 a.m. on Saturday mornings, keep your credit clean and don't quit your job.